Welcome to Pmpexress Business Edition. Just yesterday, the Ghana Statistical Service released a very critical data that all of us were looking forward to. How the Ghanaian economy fared for the third quarter of this year, and for the second quarter of this year as well. If you look at the numbers, well, we are waiting to get the clarification from the Ghana Statistical Service. It looks like we are in a recession. What has caused this? Is the outlook that bright for us, or indeed will be dipping further when it comes to how the economy has fared? How are businesses out there performing? Are things getting better or they are getting worse? How is the economy really performing? Is the outlook that good for us or not? I'll be engaging the government statistician, Professor Samuel Kobnenim, to get more understanding on this. Also, an economist, Professor Godfrey Bobkin. And also, all about this is about businesses out there. Dr. Sam Ankra, he is the chief executive of an investment firm. He's also into commodity trading. We're getting some more understanding from him as to what is happening on the ground. All these things wrapped up on Pmpexress here as you look at the economy, recovery, and recession. All these things wrap up on Pmpexress. So welcome to Pmpexress Business Edition as we look at whether Ghana's economy in recession as a recovery in sight. So the Ghana Statistical Service actually released some data, and I thought it would be very interesting for us to get some basic understanding where the economy is in terms of for the second quarter and the third quarter as well. If you look at the data as well, you get to understand something here that, listen, now the Ghana Statistical Service will always want to tell us how the economy fared with oil and without oil. Now, if you look at the agricultural sector, it grew by 8.3%. That is, if you're looking at the GDP with oil. If you look at the industry, it went down actually by 5.1%, not doing that well at all. Services sector also did 1.1%. So if you look at the graph here, it's talking about GDP with oil and GDP without oil. So if you look at all these data here, you could see that industry didn't do well, services sector didn't do well. And if you look at the fact that GDP with oil, it was 1.1%, that is a contraction. And GDP without oil, it was 0.4%. Let's also get some understanding here for those who want to more understand in terms of how they've actually fared and all the rest. And if you move forward, let's also try and move forward and get some more understanding of these graphs as well in terms of the basic graphs and how they fared as well. You have hotels and all those things here. Let's also go for it still. I still want to get some better picture for you guys to understand when we talk about how the economy is faring as well and how things are looking as well and all those things, just to break the issues down and give them to you. So this is how it gives us the basic breakdown of the numbers and how they fared as well. Let's go down and see how things are faring for us. I think we need to go down more, see how, yes, and of course, so we've seen these things here. This is telling us how growth actually fared if you look at the monetary terms as well, and it's giving us some basic understanding here. Let's also move forward and see what the next graph is going to give to us. And this is going to give us the share of the economy. So if you look at the graph right now for the third quarter, it gives us the services sector commands the largest share of the economy. For that is 42%, followed by agri, which is 23%, and industry has about 35%. So it tells us that there are more things happening in the services sector compared to the other sectors. And therefore, this economy is a service-led economy as well. So we'll get a better breakdown of this. And we'll see the numbers, how things are looking like in terms of for the various sectors of the economy, services, industry, and all those things, giving us a breakdown of this. So you've seen everything yourselves. But we're going to give you some better understanding, of course, in terms of how things are fared. We'll try to roll this report together for you, put together by my colleague, in terms of how the economy has actually fared, and then we'll get in to speak to our guests who are connecting via Zoom with us.
Exception of agriculture, all the two other sectors of the economy recorded a decline in growth. The agriculture sector grew by 2.0% for the period as a result of some improvement in the growth rate of fishing, livestock and the crop subsector. In industry, mining was the hardest hit, with the growth rate declining by negative 4.5%. The services sector also recorded a negative growth rate, despite a significant growth from the information and communication technology subsectors. Here is Professor Samuel Kobna-Enim.
Year-on-year change rate for crops was 9.0%. Livestock also saw a positive year-on-year change rate of 5.8%, but its share overall was negligible, specifically 8.4% as compared to the 78.1% for crop sector. The other sector that saw an increase was the fishing subsector, 20.4% on a year-on-year basis. Again, its share of the total GDP is negligible compared to the overall 78.1% that we see for crops. So fishing gives us a share of only 8.4% with a nominal GDP value of 1,658.5 million Ghana cedis. Within the industry sector, from a quarterly point of view, as indicated, mining and quarrying subsector saw a year-on-year change of 16.9% with a higher share of 40.4%. And this is followed by the electricity subsector, which has a year-on-year change rate of 11.6%, but a relatively small share of 4.3%.
The government statistician, however, cautioned it is too early to project that the year will record a negative growth rate, since this is just the rate for the third quarter.
It is too early because one is not too sure the interventions that are being instituted, what we've received for the month of October and November, and how that is going to impact on the earlier three quarters that we have data on. But broadly, we would say that that would constitute only a quarter of the 4 quarters that one would want to analyze for the whole year.
Meanwhile, this growth rate is an improvement over the second quarter when the COVID-19 affected most economic activities in the country.
And that was a wrap put together by my colleague on the business desk in terms of how the economy fared. So let me get on to the Zoom as we talk about Ghana's economy and recession. Is a recovery actually inside? Professor Samuel Kobna-Enim is the government statistician, and also Dr. Sam Gabrankra. He is the chief executive or the president of the African Investment Group, and Professor Godfrey Bobkin is also an economist lecturer at the University of Ghana, Legon. Professors and doctor, welcome to Pmpexress. But first, let me start with Professor Samuel Kobna-Enim and some 101 education here. So what goes into your whole measurement about GDP? You want to talk about GDP and how the economy has fared and all those things. Just help me out for there's a layman on the streets when I hear the income approach, the expenditure approach, and the production approach, Prof.
Thank you, George, and good evening to all your viewers. You really got me this evening. As I said, it's been a long day, but I managed to get onto the program. So to go straight into your question, what we do at Ghana Statistical Service in terms of the computation of GDP is, as you rightly mentioned, to look at it from 3 perspectives: the production approach, the expenditure approach, and the income approach. In Ghana, currently, we're using 2 approaches out of the 3, specifically the production and the expenditure approach. So from the production perspective, what we try to capture is looking at all the sectors. We try to look at the final value of goods and services that are produced within the economy. And the reason why we do that is to try and measure the extent to which our output will be able to meet the demands that we have in the country. We do that from 2 perspectives, on a quarterly basis and on an annual basis. From the perspective of expenditure, again, we capture all the sectors of the economy, and currently we are not computing gross domestic product from an expenditure point of view on a quarterly basis, but essentially we look at it from on an annual basis, not on a quarterly basis. So this is what we do in terms of GDP computation.
And therefore, I remember in your presentation, you tried to explain to us how you go about gathering of data. And an economy sometimes being perceived that data is quite difficult. Is that the situation for you, or we've come very far in getting the right data to give us a better picture of our economy, Prof?
I must say that we have seen significant improvement over time, but we still have a long way to go. When we are doing the computation of GDP, we looked at it from the subsector perspectives, and we have 22 subsectors in all, and we approach different agencies for data collection. I must say that the process is sometimes tiring in the sense that the data would not be ready at the time that we release it. We need it, sorry. For that reason, what we do is to designate the GDP figures at different levels. We start with having a provisional GDP figure based on the volume of data that we have, and then progressively we designate it at the level of revised, and then finally we have a final GDP figure. The agencies that have been supplying us with the data include the Ghana Revenue Authority, that I would say that helps us a lot with our data from the services point of view. We rely on the Ministry of Finance, we rely on Bank of Ghana, we rely on Customs. So we have a diversity of institutions that help us with the data collection. The reason why I indicated that we have a long way to go is with the passage of the Statistical Service Act, specifically the 1003, it's creating a platform for us to have a more collaborative engagement with all the MDAs that we're going to work with. So moving forward, we look at having administrative data pipelines where we wouldn't have to get our staff going to these MDAs on a regular basis to collect data, but we're hoping that with the aid of technology, as I indicated, we would have administrative pipelines that once the data hits the respective agencies, is going to automatically hit our database within the Ghana Statistical Service.
Prof, getting back to my school, university level, I remember that I was told that if an economy is in recession, if in 2 quarters it records a negative growth. I saw your presentation yesterday. Is the Ghanaian economy in a recession?
I would respond to this from 2-time perspective, and this is what we need to be mindful of once we're having a discussion around recession. So as I indicated, the computation of GDP is done from a time perspective, is done at 2 levels. One is to look at it on a quarterly basis, and the other is to look at it on an annual basis. Currently, we've released 3 quarters of 2020. The first quarter of 2020 puts our growth rate as 4.9%. And subsequently, in the second quarter, there was a contraction of 3.2%. And in the third quarter, we've seen another contraction of 1.1%. We have collected data, or we are in the process of collecting data for the last quarter of 2020, and we have some data for October and November already. So I'll be hesitant in drawing a conclusion that if we are doing the annual GDP for 2020, at this point in time, one can conclusively say that on an annual basis, we are in recession. But clearly, from a quarterly point of view, that is comparing 2019 quarter 2 with 2020 quarter 2, and also comparing 2020 quarter 3 with 2019 quarter 3. On both counts, we see that the economy has contracted. If you look at it on a quarter-on-quarter basis, that is looking at the period, that is the second quarter of 2020, the period between March and June 2020, we saw a contraction of 0.8%. And also for the period July to September 2020, we've seen another contraction of 0.3. So from both a quarter-on-quarter basis and quarter year-on-year basis, we've seen that the economy has contracted. But then, as I indicated for emphasis, for the whole 2020 to be declared as a recession for the country, one has to be circumspect.
So Prof, I said earlier on that I was trying to break this thing down to help all the viewers and all those things. As at now, as at end of Q3, we are in a technical recession.
George, I'm not too sure whether the use of the word technical makes a difference as against the way I explained it. So as I indicated, if you look at it from a quarter-on-quarter basis, that is comparing quarter 2 2019 with quarter 2 2020, the same time period, the economy has contracted. So we are in recession. Quarter 3 2019 compared with quarter 3 2020, again, the economy has contracted. If we want to declare 2020 as a year of recession for the country, I'm saying that we need to be circumspect in doing that. Although we've had 3 quarters and we've seen that 2 of the 3 quarters are in contraction, one has to take into consideration the absolute figures and how the different subsectors would particularly play out in the last quarter of 2020.
I see. Prof, we had some agreement to this discussion, but I'll quickly come back to you before I let you wrap up. Let me get the thoughts of Professor Bob. Can also go to Dr. Samankra. He's a businessman, and I want to get from him, what is the situation on the ground as we talk about Ghana in recession and recovery in sight as well? Prof. Bobkin, you are an economist. I mean, you play with the numbers. You look at this. For you, what do you make of this development as being in a recession? It was expected, covered, or even if you compare us to our peers, we might be doing a little bit better.
Yes, you are right. Actually, when you look at it in relative terms, we haven't done badly at all. I think we can credit what we are seeing also to the mixture of monetary and fiscal policies that were quickly deployed in response to the COVID-19. And therefore, we will say that we avoided the worst moments. But I think what we are seeing should not surprise us, because we largely expected this, that we were not immune from the effect of COVID-19. And practically that we entered COVID-19 with a bit of a weak immune system also, because we had just come out of the energy crisis ending 2015, and then 2016-17, we walked into the financial sector crisis. We were just coming out of that, and then COVID hit. So you realize that the economy has gone through a lot, and this is expected. I mean, we said before that we should not be hopeful that we're going to get a V-shaped recovery, that suddenly the economy will just rebound to pre-pandemic level, and that we have a long way to go in terms of the recovery. But of course, if you look at the various policies that have been put in place, and then the effect of that in terms of the explicit formation of public debt, and it tells us that we have quite some challenge ahead of us. And also, you also have to look at the recovery. If you look at the subsectors that are contracting, very, very, very significant. But of course, you can also see agriculture and then ICT sector that is holding us going forward. So there's a lot that we have to do. But I think that I agree with Prof, the government statistician, that is very early, given the challenges with data, because the primary oxygen for the work they do is data, and the data has to be reliable largely. And therefore, I believe that there will be a lot of some revision that will be done going forward. But what this also tells us is that as a country, we have to be prudent now that elections are over, in terms of the fiscal space and how we manage that, and how that will be complemented by monetary policy. So there are challenges ahead. If you look at the fiscal space, we practically don't have fiscal space to do some kind of a huge investment in the economy to boost economic activity. So, and then again, you also have to look at the quality of the recovery also. Is it recovery that is job-based, or the usual growth that we have seen, the usual jobless growth that we have seen over the years? And then, so this will also be informed by the kind of policies that government is going to put in place now that the elections are over and the outlook is clear. That would also play a role going forward.
Prof, I'll get back to you on
election-related expenditures that we have seen also, and how that will turn out in the last quarter of the year.
Prof, I'll get back to you on the recovery, but let me go to Dr. Samankra. He's an investor, he's into commodities, he's into investment as well. Often we get the picture that, I mean, from the numbers, there's talk about, and if you look at the Bank of Ghana figures, there's talk about a recovery. What is the situation on the ground as a businessman? Are things really picking up, or things are rather dipping for you as in struggling to get people to work with, partners to work with, or things are picking up on the ground? How is this recession hitting you, and do you see things improving very soon? From a perspective of somebody who's into commodity trading.
Well, George, first of all, thank you very much for the opportunity. And also thank you for your cherished listeners this evening. As Prof was saying earlier on, there had been a sequence of events. We had gone through the energy crisis. We've gone to the financial sector cleaning. And then all of a sudden, COVID from nowhere hits it. So obviously for businesses, there had been very turbulent times in the process. And then when the feel of COVID almost like coming to an end versus vaccine in the near, we entered into the election period. One would have thought after election, with a euphoria of Christmas coming, the market is going to get stimulated. People are going to spend money. The euphoria will help to boost the other sectors of the economy. Unfortunately, we entered ourselves into this electoral dispute as well. So again, we put a lot of local investors into caution. Although when you go to the external market, it's not have a really part on that. But the local market, local investors obviously would exercise some bit of caution, and because of that also that had affected the economy. So on the ground, nothing much had changed. One would expect government to take aggressive steps towards this to be able to stimulate the economy and get out of this recession and also boom the economy. And there are certain critical areas that we're looking for government to have a specific, deliberate policy drive. We're looking at ICT. It's so crucial. We are aware of the effect of the economy of the increase in broadband penetration. Is well documented. But every effort should be made to encourage investment in this digital infrastructure, to increase access to internet. We need to increase our investment into digital sectors as well. We're looking at fiber optic networks, wireless networks, data centers. I mean, I appreciate the fact that government has acquired Airtel Tigo, but then there has to push forward where Tigo has to merge with Vodafone. Would there be a perfect playing field between MTN and Vodafone? Government must put in place e-government system to improve efficiencies in revenue collection. Because at the moment, the revenue collection obviously is not up to what targets that they've been looking for. So efficient systems and ICT, e-government system is so crucial at this stage. One would get out of this recession and also help in economic boom, traffic management, fraud, and also demonstrate leadership to the business sector that who have been very hesitant to embrace the online tools such as the cloud. We expect government to take the lead on that. And by so doing, would accelerate the economic activities as well. We need government to promote digital startup businesses. I know they started the Ghana Tech Hub. It's a very good example. Encouraged, because when we do that, the benefit from the focus of digitization of the economy are going to be in the agricultural sector, the logistics sector, the finance sector, the banking sector, the economic insurance, the health sector, the media. All these areas are significantly going to be benefit if we move on to digitization. So one would expect specific and deliberate policy drive towards this. I mean, Prof talked about agriculture, so I wouldn't even go into detail on that. But agriculture is very, very, very crucial for us. It's a major employer, number one. And also, I mean, with the food scarcity and so forth, we need to be able to invest so much into agriculture. We also have to diversify from cocoa to other tree crops as well. And we need to increase our investment in food processing. Because again, as we sit in here, we're importing almost everything. Food processing needs to be increased so that we can add value to it. Then infrastructure. Infrastructure is of twofold. Spending to stimulate the economy, and also the long-term process of the laying of the infrastructure, roads, railways. I mean, we all know the Buankra Inland Port is starting next year. It's a laudable idea. A railway connection from Takoradi to Buankra is so crucial. I mean, the estimate is about 10 billion increase in the economic size just by easing the pressure from Tema to Takoradi. So basically, these are all specific areas. Energy. We cannot just rely on fossil fuel. Move into renewable. So I believe, yes, this was expected. And George, this is not the first time such a thing has happened. After the Second World War, such activities was felt in the market. But government took deliberate economic policies, and we're expecting our government to be able to do the same to help us of this recession and also help boom the economy.
But Doc, I mean, you are into commodity trading, and you're talking about the agri sector doing that well. Do you see an end in sight very soon? Because if I look at the data compared to second quarter, I've seen the contraction improving a little bit. On the ground, there's talk about businesses picking up and all the rest, easing of restrictions. Are you seeing it? Are you feeling it on the ground? Oh, listen, it's still a long sight away.
Like I said earlier, George, it's not been felt on the ground, but it's expected. And we're looking, once these deliberate policies are being taken, one would envisage that these would follow suit. But as it is now, as of talking today to you on this program, it hasn't been felt. We haven't felt the growth yet. Whether it's marginal or not, we can't tell. But clearly, the market is suffering. There's a bit of stifle in the market, and we're expecting government to immediately take steps to address these issues.
Let me get back to Professor Neiman before I let him go. Prof, I mean, in all your presentation, you always advise us to be very cautious at how we go about interpreting the figures and all the rest. I look at Q2, I look at Q3, and I tend to be a little bit optimistic that we may be getting out of this thing very soon. What do you say about that one?
From the numbers point of view, you are right. Q2, the contraction was 3.2 with oil inclusive, and Q3, the contraction has slowed down to 1.1. And again, if you look at it from a non-oil perspective, it was 3.4 in Q2, and currently we're seeing 0.4. So based on the numbers, one clearly can suggest or surmise that we're heading towards a bounce back to growth rather than contraction. But again, we need to be careful in terms of the subsectors that are driving this. One of the things that you said at the beginning of the program, which I think we need to emphasize on, has to do with the variations across the sectors. So what we're currently seeing is that the contraction has been mainly driven by the industry sector that shrunk by 5.1%. And also the services sector, and again, as you rightly said, the economy is service-led, and that sector also shrunk by 1.1%. And these two contractions from the industry and services sector did offset the 8.3 increase in the agricultural sector, which was mainly driven by crops. One thing that I want to emphasize is the fact that in view of all these numbers that we're talking about, we try to compare it with businesses that were still closed down during the period July-September. And during the presentation, we did indicate that the manufacturing sector that is driving the industry sector did see over 11,556 firms that were still closed down. So if these firms would permanently close down over the period, and it's the industry sector and the services sector that are going to drive our contraction, then the numbers in itself would have to be looked at not only from the sector point of view, but from the subsectors perspective.
But Prof, from the numbers that you see so far, do you think that we might be getting out of this contraction very soon?
As a statistician, we are circumspect in predicting based on these things. And I like the way my two colleagues have articulated their point. Essentially, it depends on the interventions that have been put in place and the sectors that are receiving those interventions. And one is not too sure how people are going to react to the elections that we've just gone through and the festive period that is ahead of us. January, it's always, December is always a tricky month because it's a festive period and one expects spending to go up. But given the elections, one would have to be careful in saying that it will follow the trends during a non-election year. So again, I wouldn't put my head out and say that we're going to get out of the contraction in the last quarter of 2020, but all depends on the interventions that will be instituted.
If again, I ask myself, is it about the weighting? Because agri sector did quite well, but it looks like it was not strong enough to offset, to still push the economy up.
Yes, it's essentially about the weighting. And again, if you look at it just from the numbers point of view, we saw 16 subsectors that expanded in the period quarter 3 2020. And only 4 subsectors contracted, and these were one would call the movers of our GDP. The subsectors that contracted were hotels and restaurants. That is not really a heavyweight, but the 2 subsectors that I'll tag as heavyweights are mining and quarrying, which contracted by 16.9%, but the share of GDP is 13.9%. So mining and quarrying alone is taking close to 14% of our total GDP. And the other sector that we call a mover of the GDP is the trade, repair of vehicles and household goods. that also contracted by 7.7%, and its share of GDP is 11.4%. So taking just these two sectors, we are talking about a fifth in terms of share of GDP, of our total GDP. So irrespective of what happens in the other 18 subsectors, these two sectors would continue to determine what happens to our GDP growth rate.
And do you think that we should look at a policy, well-targeted policy? Because some have complained about jobless growth. We are growing all right. What policy direction and what sectors should be targeted in our quest to fast-track the recovery? Because some are saying that, Prof, I mean, even with a little intervention of government, we've seen the contraction slow a little bit. If we could have done more, maybe we could have been getting out of this even in Q3.
George, you are absolutely right. What we need to do as a country is to do targeting intervention. As my colleague spoke, Dr. Ankra articulated the various interventions. What I did ask myself is, even within the ICT sector, what are you going to concentrate on? It's about time we begin to look at very detailed level interventions rather than broad interventions. You see people talking about agri, industry, services. Really, this does not mean anything for us. What we need to think about is within even the subsectors, where lie the heavy subsectors, and how do these subsectors relate with the other sectors? So if you're going into ICT and the main focus is on data rather than the infrastructure, which is going to influence or drive technology, for that matter, the industry sector to thrive. We'll keep on talking about these things at the superficial level, and we're going to see minimal impact on our economy. So it is really about time that we need to think about the heavy subsectors that we have in the economy, and more importantly, how these subsectors interlink with the other sectors to ensure that the growth is seen. One thing that we saw in Q3 2020 was a reduction in the contribution of services sector. Indeed, in the second quarter of 2020, services sector contributed 48% as share of GDP, and is gone down by 6% for the third quarter of 2020.
Professor Bobkin, in terms of looking forward, for you, are you excited that, listen, the outlook is that bright for us, or listen, it's quite early days here, George, for us to be excited that because the numbers are looking quite good, we are going to get out of this thing very soon?
I think we have to be moderate with our expectations. And I agree with the Prof that just focusing at a broader level and the kind of interventions that we have done so far, perhaps maybe the reason why we are not seeing the response that much. So we have to be cautious. We have to be very careful. But the question we need to also ask ourselves is, what kind of recovery are we anticipating, the quality of that recovery? Recovery that aggressively tackles inequality will be the way to go. Then in that case, you need to look at where the interventions then will have to go to engineer growth that will come along with quality and sustainable job creation. That is very, very fundamental for us. The reason I'm trying to be a bit careful is when you look at the fiscal space, I mean, government revenue envelope is also impacted negatively with a slowdown in economic activity. Okay, and yet the emerging expenditure patterns have come. The government has to deal with more health-related and all of that. So the space is practically not there right now to really influence economic activity, because a lot of the interventions will also require the necessary financing. So the question would be, how do we devise that fiscally responsible alternative funding arrangements in the economy without also hitting the economy so much? Because you don't, the same industries who need some kind of support from government in order to also stand on their feet. Some will look for tax concession and all of that. But at the same time, the government needs that revenue as well. But I'm hopeful on the other hand also, because when you look at our tax efforts, and if you compare that to our peers with similar informality challenges and all of that, you realize that our peers are doing between 18 to 20%. Our tax efforts is around 13%. So that tells you that we have a potential there to scale up domestic revenue mobilization without burdening the faithful few. And I think government will have to look at that and ensure greater tax compliance going forward. Other than that, it's going to be difficult. When you look at where we find ourselves right now, you look at our debt stock, you look at even if you make provision for how much interest payment will have to be made next year, and then compensation of employees, government is practically left with nothing. And that is going to be a challenge for us going forward. We cannot continue to rely on Bank of Ghana to do a little bit more deficit financing, because it will get to a point and they would also have to unwind, because quantitative easing is not supposed to be a lasting intervention in the system. And I believe that the governor has been talking about that. So we don't need to push the burden so much to the monetary side. We have to be able to be prudent in terms of our fiscal policy and be a bit aggressive with domestic revenue mobilization. That is the way to go.
Prof,
and when we do that, then we go beyond the macro level interventions and begin to look at the sub-sectors that can actually engineer growth and come along with job creation. And that is the only way we can make growth sustainable. As it stands now, I think that we have to be we have to be cautious in terms of our expectations and manage our expectations going forward.
Prof,
even though we have exited the lockdown, you realize that because the virus hasn't been contained totally in terms of coming out with a scientific solution to it, people are still voluntarily self-isolating or in some kind of lockdown, and therefore we are not seeing the kind of response that should come in terms of the real economic activity.
Prof, I mean, when I realized that we were in an economic recession, I mean, I went back to some of my notes to look at the effects of it, and I said that maybe we have already felt the shocks of the recession already, because if you look at what has happened already in the past month, are we supposed to feel any shocks again going forward? And should we expect the rating agencies and our development partners to punish us as in the shocks that comes with, or the negative reaction that comes with being a recession as an economy?
Well, I think that it can be explained, and this will not come to them as a surprise. In fact, I have had some reservations with the ratings that have come because of the context now, and then the assumptions underlining those ratings, because these are extraordinary times, and it's not like we are alone in this. So we will have to be very careful in terms of how we see those ratings and the interpretations we bring to bear on them. But I think that, but if when you look at it from advanced countries where interest rate, the way their central banks have responded, interest rates are going to remain low for very long. That in itself would increase their appetite for instruments from our part of the world. So in terms of assessing capital from the international capital market, we will not do badly from that point, but of course, it's going to come at a certain point.
But Prof, the question I'm trying to ask is that, should we expect any negative target or shocks for our economy because of where we find ourselves now?
No, I'm not expecting such a negative reaction, but I believe that of course, the worst moment, I see that they are over. If you look at the extent of the contraction in Q3, even though we still need a little bit more data to confirm that. But I think that is what it is, and investors will not shy away from us totally just because of that.
I see. I'll take a short break, Dr. Ankra. I'll come back to you in terms of what do businesses also want in our quest to help stimulate or fast-track the recovery. So now I'll come to you as Prof as we try to run it. But I'll take a short break. This is Pmpexress as we look at Ghana in recession as an economy, or as a recovery really in sight, or really we are in for quite a long haul. We'll take a short break and we'll be right back. Welcome back to Pmpexress Business Edition as we look at Ghana's economy in recession as a recovery in sight, or maybe it might take us quite a long time. We are indeed grateful to have the government statistician, Professor Samokomnenimo, with us on Zoom, and also Professor Godfrey Bobkin. He is an economist, and also Dr. Samankra. He is the president of the African Investment Group. He's an investor, he's a businessman, and he's into commodity trading as well. professors and doctor. I think I'm the only one left out. Maybe very soon I could also be a doctor. Thank you so much for having time with us this evening on Pmpexress Business Edition. But Dr. Samankra, I was asking you, for businesses out there, what do you want? Do you want another tax break? Do you want another stimulus package? In other countries in the US, they are still battling it out of another stimulus package for businesses as well. Do you think that that is what you need right now? You need more stimulus package to, again, help private sector thrive, grow, expand, employ more people. Dr. Samankra, if you can hear me, please. I was just asking you whether you want another stimulus package from government to help fast-track the pickup of businesses that have gone down. Doc, if you can hear me, Samankra, if you can hear me, you should have to unmute yourself, please. So, Doc, I was asking whether for businesses out there, do you need another stimulus package from government to help in the recovery?
George, I mean, yes, as much as we need stimulus package as businesses, we also want the government to acknowledge that there is a problem going forward, and necessary steps would be put in place to address these steps. And what I mean by steps is I'm talking about having deliberate policies that would understand the issues at hand and address them square up, so that businesses can have the freeway. Because as for businesses, all we're looking for is an enabling environment, not cash in hand. So once you create the enabling environment for the businesses, I believe that the businesses themselves can get out of this recession and help with the economic boom. Like I said, I've stated the various areas that we're expecting government to take deliberate policies and invest heavily into it. And if these are done, and I'm sure it will cut across the spectrum of the economy.
I see. And that is what you really actually want? Or you want more, absolutely, just like a little twist?
Well, obviously, I mean, nobody wouldn't want more. We are looking for tax exemptions. We are looking for tax holidays. We can ask for everything. But at the end of the day, we need to be very considerate as well and understand where we are as a country and where we're going. So if we have to bite the bullet now and make the benefits going forward, I'm sure businesses will understand and quit. But the basic is laying the right infrastructure, creating the right frame for businesses to thrive on, and that's what we're looking for, ease to do business.
Prof, some government statistician, should these policies be all government targeted, or private sector can also do something about it? I can also do something about it. Should it always be a government-driven policy in terms of stimulating this growth and the turnaround that we are all looking forward to?
A pretty straightforward response is no. It cannot all be government. And from my point of view, what is needed is really defining the roles well in terms of what the government needs to do and what is expected from private sector. I think that is the point that we don't seem to get very right in terms of the enabling environment and in what areas that we expect the government to create those enabling environment. If we get those enabling environment right, certainly the private sector is going to thrive. There should be continuous dialogue on what we think the government can do best in terms of its mandate as the government and what comparative advantage that it holds vis-a-vis the private sector. So certainly the government should not be the one doing all. What is important is a well-defined pathways for each of the different sectors that we have in the economy and see where they can converge.
Prof, there's always been this question I wanted to ask you. There are some who still think that we've not been able to gauge the right size of our economy. People still think that we are bigger than what we are being told from the fiscal service perspective. Do you disagree with that, or you share with that thoughts, argument out there?
I would not totally dismiss that argument. As I indicated earlier on, we've seen much improvement in our data collection space, but certainly there is room for us to improve. And as a statistical agency, we rely on, as I said, other MDAs for the data in the computation of our GDP. There are some sectors that we still do not get them reflected in our activity. So certainly one looks forward in getting a much better estimate of our GDP. Having said that, let us not leave this platform with the notion that our GDP is far from what is on the ground. I mean, in terms of how close it is, in terms of reality, we've captured all the sectors that one needs to capture, but it is, our economy goes through structural changes at any point in time. So my response is more inclined towards the extent to which we are able to quickly realize the sectors that are evolving and how we can get those sectors play out into our sectors in the computation of GDP.
Professor Godfrey Bobkin, I mean, looking forward into 2021, do you think that we'll go past this challenge and we are up for a trajectory, good times ahead? Because if you also look at the World Bank, the IMF, and other agencies as well, they're a little bit optimistic about our growth outlook. 4% for the size of our economy, maybe it's not that bad.
Yes, George, not that bad, but we have never been that happy with the growth that we have seen even pre-pandemic level. I mean, because it hasn't been growth that has been inclusive, and it has been largely jobless growth. So I think the conversation, we need to modify the conversation a bit and then begin to look at the kind of recovery that I think will work for us, that will be sustainable, the kind of recovery, and which sector should be leading that. And I think my two colleagues have talked about that. We need to be intentional about growing those subsectors. And to be intentional means that we have to direct policies to those subsectors and also back it with the necessary funding. And of course, we cannot look up to government alone to do all of that. We all do recognize that the private sector is the engine of growth. But more importantly, government needs to be prudent in terms of managing the fiscal policy going forward and in creating the enabling environment. Then the next question will be, we've been talking about enabling environment. To the private sector, what is it that constitutes enabling environment? Certainly an interest rate of 21% cannot be said to be enabling, and with such a maturity tenure cannot be said to be enabling. So if you look at all these frictions, you realize that there's still a lot of work that we have to do in easing the restrictions on the growth drivers of the economy. Okay. So of course, now we're going to gather the data in terms of the election-related expenditures and see where that leaves us with by the end of this year, and that would also inform the kind of fiscal policies that government will fashion out from 2021, and how much space that gives to monetary policy side to also, because oftentimes under inflation targeting, you need fiscal discipline in order to ensure effective monetary policy. Okay,
Prof, I may have to hold you there because time is not on our side. Dr. Samankra, in a minute, your final words. In a minute or 30 seconds.
Okay, thanks, George. I mean, final comments. Ghanaians, by and large, are very compliant and disciplined people. Human capital in Ghana is not fully appreciated. It needs to be fully harnessed. We need to liberalize institutions. Very, very important to make it easier for companies to thrive. Okay. And especially easier to buy and sell land. Land issues need to be looked at very carefully for businesses. Okay. So basically, and also what I said earlier, digital startups, because the efficiencies in these things will flow through the rest of the economy. And basically, we will all be happy, and happy days for everybody.
Thank you, Doc. Prof, in a minute or 30 seconds, your final words, please.
So let's continue to use the data in circumspect. Anytime we do a release, we add on some notes for the use of the data. We provide further details, and most of the things that have come up in terms of subsectors that we need to target. If you look at our bulletin, we've provided those details. And from my point of view, those details is what should drive policy in this country rather than the macro aggregate picture that we always present. Thank you.
Professor Godfrey Bobkin, you have the final words, 30 seconds.
Yeah, thank you. I think what I would say is that we have to be moderate with our expectations because the effect of COVID-19 perhaps is going to stay with us for decades to come. And thank you very much for this opportunity, and good evening to our cherished listeners.
Thank you so much, Professor Samuel Kobnini. He's the government statistician. Professor Godfrey Bobkin, he is an economist, and Dr. Saminim, he is president of the African Investment Group. He's an investor, he's into commodity trading as well. Two professors, one doctor. I thank you so much for your time on Pmpexress Business Edition. I hope the discussion and debate will still go on in our various offices and homes about whether the recovery is indeed in sight. My name is George Yaffe. Have a great day.